Good morning and welcome to today's webcast, Sales and Use Tax, How to Stay Compliant. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, I'm pleased to introduce today's presenters from Moss Adams, Mo Huda, Tax Senior Manager, and Tom Hoops, Manager. Mo leads our Sales and Use Tax Compliance practice and has been in Sales and Use Tax Consulting since 1997. He focuses on sales and use tax compliance, tax technology-related initiatives, sales tax implications on mergers and acquisitions, voluntary disclosure programs, nexus, and taxability studies. Tom is a manager of our Sales and Use Tax Compliance practice and has worked in Sales and Use Tax Compliance since 2012. He leads onboarding and implementation projects for clients and across industries and manages VDA and state registration projects as they relate to tax and compliance issues. And with that, I will turn it over to Mo to get us started.
Thanks, Emily. Hi, everyone. Welcome today. We're really excited to have everyone joining us. We have a rather large crowd, so we have close to 900 attendees today. And we have a full agenda with many topics related to sales tax compliance. Over the last few years, we have noted that especially in the middle market sector, sales tax compliance has been top of mind. Sales tax compliance is a complex process that is not a value-added activity, and if you do it right, you only get the reward of filing discount. And if you don't do it right, you not only get penalty and interest imposed, but also get a call from CFO or owners because it's a trust tax. So our objective today is to cover some of the key elements of sales tax compliance that can impact someone who's just starting or someone who has been doing in 45 states. And the goal is hopefully you can take 2 to 3 elements of sales tax compliance operation that can make your operation a little bit better, more efficient, and perhaps a lot more safer than your current operation as well. So having said that, our first polling question, we're going to have 4 polling questions, and hopefully it will give you about a minute. You have to answer them to get the CPE credit. And also, we're going to send you a copy of the slide so you don't have to take any notes. So first question is, which is the most challenging aspect of sales tax compliance operation for your organization? Option 1, managing sales tax collection process, preparing the returns, monitoring deadlines, making payments, all of the above. So as you see, it's not a trick question. The sales tax compliance operation involves all of these aspects. So I'll give you another few seconds. I have an inclination that I know the answer that's probably going to have majority here, but I'll see how. Yeah, all of the above is actually tied with managing sales tax collection process. Very interesting. So we will cover how an automation and the collection process can be improved, make it efficient. So let's go to the agenda item. So I'll go to the next slide. So what we're going to cover today is the compliance journey stages, the common risks and risk catalyst with the compliance operation, internal processes that you can manage to make to manage the risk or mitigate the risk, sales tax system related consideration to improve your compliance operation, and the key consideration for outsourcing. So we've framed this slide to show, I think it's where you are in the compliance journey. I'm not going to read the slide. So what we're trying to frame here is if you're in the beginning stage of your compliance journey. So the items that you're more concerned about is what you really don't know, where you have nexus footprint, where you have tax, what is the taxability of your products, how you collect the sales tax from different jurisdictions, and then how you report them. If you're already filing in certain jurisdictions, then you're more focused on how you can make it better. What are the ways to automate the process, not only collection, but also the filing. And also, if you're filing in all 45 states, or you're filing 20 or substantially material number of states, then your focus is how do you file them timely without missing deadlines? You automate the process. Your team can focus on more value-added activities. How can you deploy your operational resources so that you're not churning the returns, but you're actually helping the organization to manage with the planning, with the audits, or making sure that they're interacting with the other departments to sync your tax organization. And then if you're doing all of the above correctly, and you still have to make sure that your exemption certificates are properly managed on an ongoing basis. Your use taxes are, if you're in the manufacturing, construction, healthcare, technology, companies, then you still have to focus on use tax compliance. So you need to manually still understand, how much use tax you owe and when you need to pay, and how to automate that part as well. So what are the key elements of sales tax compliance? So you need to understand where you need to file. You need to understand your products, especially if you're into healthcare again, manufacturing, technology related. There are a lot of nuances and complexity in those industries. Along with, once you figure out, okay, I have nexus or filing responsibility and my products are taxable, then you still have to register. Then you have to understand, okay, how do I collect the tax, the right amount of tax, and how do I keep track of all the changes? The rate changes, the taxability changes, and then how do I file all the returns? There are different types of returns. We're going to cover some of the differences. So there could be different forms. There are different types of returns. Which one do you really select to file your returns? And then even after you file, you have to still reconcile. There are three elements of reconciliation. You have to reconcile what you're collecting with your GL. You have to reconcile what you have collected with your returns, and then you have to reconcile what's your payable is after you make payments every month. So even if you, after you do the reconciliation, you still need to track everything. So on a monthly basis, you need to track when are the deadlines, who is doing it, and when are they doing it, and are the returns filed properly. And then if an audit, you also need to manage the audit through the tracking mechanism as well. And then lastly, record keeping. Record keeping involves 3 elements as well. You have to monitor your tax returns, that they're filed properly, and also have them close to 7 years for audit purposes. And then exemption and resale certificates. There are 11 jurisdictions that actually you have to renew the certificates, so you have to monitor them. Are they expiring? Do you have a valid certificate? So there are certain tracking and collection, validation, and retention protocol with the certificates as well that you have to maintain. I want to give a credit for this slide to CPAcom. We're doing a presentation with CPAcom in June in the AICPA conference. CPAcom is a AICPA sister organization, and I borrowed this slide and 3 other slides from the presentation. So this slide articulates and frames what are the manual processes within a compliance cycle. So it highlights there are close to around 12 to 15 touch points, starting with taking the data, pulling the data together. If you have a prepayment, bad debts, credit carry forwards, you have to capture those. You have to compile all the data, making sure you have all the right data for the returns. And if you're doing it in Excel, you have to still put them manually in all the forms. And then once you put them in the form, you have to review the forms to make sure you have the right amount of gross sales, taxable sales, exempt sales, prepayments, bad debt, they're all in the forms. And then you have to finalize the returns, print them, or if you're not mailing, most of the filings are done on web. So you have to still enter the data in the websites. And then either you do through ACH debit or you write a check. I mean, this day and age, no one writes a check. Either you do an EDI or you file it through the web. No, those are just a manual process. So we wanted to highlight there are close to 12 to 15 touch points that someone has to manage every month to finish the return from beginning to end. Now, if you automate, and we're going to talk about the automation element in a few minutes, if you automate the process, you can probably do all those 15 steps in 3 steps. You still have to reconcile the data. You still have to approve the returns, and you still have to archive the returns manually in your system. And the returns will be there. Someone has to download them and still archive them. You probably still may need to monitor the bad debts. Bad debts are not always automated because it's a manual data point, and you may have to capture those. So the key here is that if you're just starting the compliance journey, just understand that there will be a lot of manual process involved if you don't have it automated. And that's why automation is probably one of the key areas you can focus if you're just starting for compliance improvement. Our second polling question is, how many sales tax jurisdictions are there now in the US, including state and local? 5,000, 11,000, 21,000, 31,000. So give it a few seconds to see. And the complexity around the tax jurisdiction is, not only there are, I was in a webinar yesterday, actually a presentation by one of the software providers, and there are 700,000 tax decisions out there. That's a combination of jurisdiction and tax products, potential, combination. So if you can imagine, if you're in a healthcare spectrum, or if you're in a construction spectrum industry or software industry, it can get very complicated pretty quickly. Oh, sorry. So 21,000. Actually, the right answer is 11,000. It's close to around 12,000 now, anywhere from 11 to 12,000. So that shows you that it's a challenging aspect to monitor and collect the tax if you're doing it manually. If you're growing your footprint, it can be a daunting task to do it accurately. Okay, I'll transition to Tom.
Great. Thanks, Mo. On the next slide here, I'm going to go over the common risks and risk catalysts associated with sales tax compliance. So as we get into this, there's a lot of risks associated with sales tax compliance. One of the biggest ones is going to be the accurate liability calculation. You want to make sure that you're accurately collecting your sales tax, and you have risks on both ends of it. If you're under collecting sales tax, there's obvious reasons to make sure you don't want to do that. One is going to be if you become under audit by a state, you could be subject to penalty and interest, as well as the tax obligation to get those returns filed and paid accurately. So you want to make sure that you're collecting the correct tax rate. Over collecting the tax rate has its own risks as well. Over collecting could result in class action lawsuits coming from your clients or your customers. So you want to make sure that you are collecting the accurate tax rate. And then missed deadlines. So if you are collecting correctly and now you're filing and paying those tax returns, you want to make sure that you're keeping up with those tax obligations. There's prepayments that are associated to the returns as well. So you want to make sure that you're filing and paying those on time. Typically, sales tax returns are going to be due on the 20th of the month. However, you could have returns due earlier. So you want to make sure that you understand those due dates of those tax returns. And then also with the filing frequency, you want to make sure that you're maintaining the accurate filing frequency for each return. States can adjust these depending on if you exceed a threshold or not. So you may be set up as quarterly 1 year, and then once you exceed that threshold, they may set you up as monthly the following year. So you want to make sure you're staying up to date on that so that you're filing timely and accurately. If you don't file timely and accurately, you could be subject to penalty and interest. These typically come in the form of notices. So if a state finds that you've filed late or paid late, you may be subject to up to 25% penalty and then interest on that tax liability as well. So you want to make sure that you're addressing those notices in a timely manner, not letting them linger. Letting them linger could result in a tax lien filed against you and further consequences due to that. Filing errors, it's really important to understand, where you're supposed to be filing, how you're supposed to be filing, and just really making sure that you're filing those returns accurately. Don't want to leave something on the website not submitted. You want to make sure that you're filing, paying that, making sure everything's submitted, and then documented as well. And then if you do file and pay on time, however you make an overpayment, this can be a timely process to get that money back. Working with states, some states will just come and tell you that they don't have the money to pay you back. So now they may offer you a credit to use on future returns. So you want to make sure you're tracking that credit, using that credit in a timely manner, and then making sure that if you are subject to a refund or you are have a refund available to you, that you're working with the state in a timely manner to get that money back. Sales tax holidays are another risk that you want to make sure that you're monitoring these sales tax holidays. They can come up kind of short notice and in ways that states just decide or local jurisdictions decide that you're now subject or that they're now going to impose a sales tax holiday. So you want to make sure that you're keeping track of these and then implementing them into any type of software you're using to calculate your sales tax. So this brings us to our next polling question. This is the third polling question of today. Which U.S. Supreme Court case set the precedent for physical presence nexus? So we have answer A, South Dakota versus Wayfair. Answer B, National Bellis Hess versus Illinois. Answer C, Mapp versus Ohio. And answer D, Jefferson Lines versus Oklahoma. I want to point out the importance of this question. The two words there, physical presence, is what's important in this question. So we have about 34%, 50% of attendees who have answered so far. So again, make sure you're answering these questions if you're looking to get the CPE credit. Okay, so I think we tricked some people up with this question. South Dakota versus Wayfair is on the front of everybody's mind right now because it's the most recent Supreme Court case ruling, and it's an extremely important Supreme Court case ruling that really set the precedence for economic nexus. So we kind of threw this trick question in here just to make sure that people are thinking about not only economic nexus, but the physical nexus. And the physical nexus precedent was set in the National Bellis Hess versus Illinois Supreme Court case ruling. So those who answered question B got that one correct.
Yeah, thanks, Tom. And I also want to highlight that even if you have economic nexus, you still need to consider the physical presence. And physical presence will always be around. So if you have an office, a warehouse, an employee, and then you also additionally, you cross the economic threshold, you should be considering when did you establish the physical presence. So for example, let's say you have an office in Texas starting from 2016, and then you have just created an economic presence right now in 2022. So if you're thinking that, well, I'm going to go and your products are taxable, and now you're going to go and file the tax return or register, you potentially have exposure starting from 16. So it's so important that you not only monitor your economic presence currently, but also look at your entire footprint, historical footprint, to understand if you have any potential exposure in that particular jurisdiction. So before you register, because once you register, you don't have any opportunity to mitigate any prior risk. So we just wanted to highlight it there. Back to you, Tom.
Yep. Thank you, Mel. And thanks for touching on this next slide. And just to go over the importance again of the nexus, making sure that you're collecting your tax where you're supposed to. You really want to make sure that you're going through a proper nexus study to understand where you do have nexus, and not just looking at the economic nexus, but the physical nexus. And this can result in audits as well. So if you should be collecting in a state and you're not collecting in that state, there's some exposure to being audited by the states in those jurisdictions. A major risk and really a catalyst for risk is doing any type of manual sales tax determination. So anything outside of a sales tax software, you really want to make sure that you're being thorough and really understanding the complexities of the sales tax determination process and collection. You're subject to a lot of errors. The polling question previous, we mentioned there's the 11,000 taxing jurisdictions in the United States. So you really want to make sure that you're collecting in all of those jurisdictions accurately. And then also, understanding the taxability of products. So understanding if your product is taxable or exempt, or and we see a lot with software as a service currently. States are kind of changing back and forth if they're going to tax on it, and a lot of the states want to tax on it, but they're just trying to figure out ways that they can. So you want to make sure you're keeping up with those changing rules as well. More catalysts that can cause risks are fragmented systems. So if you have web sales are part of your business and you're calculating sales tax on your web sales, but you also have point of sales transactions that may be taking place at a retail store, you want to make sure that both of those are calculating the tax correctly. One may be subject to use tax, seller's use tax transactions, and the point of sale may be subject to sales tax transactions. So you want to you can report those to the state. Sourcing is another important aspect when it comes to manual tax calculation. You want to make sure that you're keeping track of the origin of your transaction as well as destination. Most states tax at the destination of the transaction. However, there are states that will tax at an origination of that transaction. And then there's hybrid states as well. So you want to make sure that you're keeping track of that and the correct tax rate is being calculated on those transactions. Currency of sales and use tax rates. You want to make sure that you're calculating all of the local level tax returns. So, states like Colorado, for instance, have many local sales tax returns that you have to register and report as well. So you want to make sure that you're considering all of those as you're registering in a state and doing business in a state. And then use tax reporting. making sure that you're accruing the correct sales tax or use tax on transactions that you're on purchases that you're making. These are things that we see a lot that come up in audits. So auditors are quick to look at your purchases and then try to get you for some liability that showing that you didn't accrue tax correctly on those purchases. And then reduced rates, especially in the manufacturing industry, there's reduced rates that our clients are able to take advantage of, and that they have to collect accurately as well. So you want to make sure that, depending on the product or the service that you're selling, that you're collecting that correct tax rate based off of that reduced rate. To continue with some of the common risks, data, making sure that that data is being collected correctly, and then also making sure that that data is being reported in the correct manner. So you don't have a bunch of different reports. You're able to consolidate that onto one report so that you're able to prepare the return and file that return correctly. And credit memos and customers' returns, understanding based on the type of business you're doing, are you able to take a customer return and report that in the next month, or is it something that you're going to have to go back and file an amended return to seek a refund for? So really depending on the industry that you're in, and then understanding how you can manage those customer returns. Credit memos, if you've received a credit from a state, understanding how you can use that credit memo on the future return, breaking it up if you have to use it in a certain jurisdiction, or if it can be used at the state level or local level. You really want to understand how those credit memos can be used. And then, just with Excel-based, you want to make sure that as you're filing the return on the state, that you understand the jurisdictions that you're doing the transaction in. Can be difficult if all you have is a zip code. You want to make sure that you have the city and counties available to you as well, so that you can report those on the state websites that require you to report that way. Understanding forms, another important aspect of sales tax compliance. There's different types of forms that you'll have to set up as you register in a state. So sales tax is going to be your returns that are most typically registered for. However, there are seller's use tax returns, direct marketer returns, and then consumer use tax returns. Some states, you may be reporting all of these on the same return. Other states, you may have an individual return for each one of these types of transaction. So you want to make sure that you're registering for the correct sales type, and that you're reporting that in a timely manner each month. Prepayments, you want to make sure that if you're exceeding any type of threshold that the state has in place, that you're setting up those prepayments and making those each month. Florida, for instance, has a prepayment rule in place where I believe if it's anything over, if you collect and report $200,000 of tax in a calendar year, you're now required to report and pay a prepayment each month. So the state doesn't come and tell you when you exceeded $200,000, but they do keep track of that. And if you don't start making a prepayment, you'll receive notices for not making those prepayments. So something you definitely want to make sure you're just aware of and understanding as you're completing your sales tax filings. And then, like mentioned above, the credit carry forwards, want to make sure that if you do have a credit, you're using it in a timely manner and using it accurately. So you're not overusing the credit or underusing the credit. You're getting what you can out of that credit that's available to you. Anybody who's filed in Colorado and Missouri understand the burden that is put on you regarding the local jurisdictions and the non-physical locations. So Colorado and Missouri, in order to accurately file, you have to report non-physical locations. They're called branch IDs in Colorado and site codes in Missouri. Colorado has over 650 of these, and I believe Missouri has over 800 of these. So you really got to make sure you're setting those up accurately and then filing accurately each month. So you need to understand where your transactions are taking place, and anytime you have a transaction in a new jurisdiction in Colorado and Missouri, you want to make sure you're setting up those non-physical locations with the state. And then payments. It's extremely important to make sure that you're making your payments on time. The state just doesn't want you to file the return. They want their money. And if they don't get their money, they're going to assess you a penalty and notice for that. So you want to make sure that, once the return has been filed and a payment has been scheduled, that you're working with your Treasury Department to make sure that that payment is approved and ready to clear your bank account. So you want to make sure there's money in the bank account to clear that account, and then you also want to make sure that there's no debit blocks or any types of blocks on your payment system to reject that payment. And then if you do miss a payment, you want to make sure that you get that payment made as soon as possible to stop the interest from growing on that. So I'm going to send it back to Mo to go over the risk resolution.
Thanks, Tom. So we covered some of the key areas of risk. So we should also consider how we can resolve and mitigate them. So we wanted to highlight some of the areas you can focus on internally to improve your current operation. Or if you're just starting, these are the areas where you can focus on to make sure that your operation is streamlined, and from the start, you're using some of the best practices. And we're going to talk a little bit on automation, but the automation is pretty critical because as you are growing, let's say you are into 3 to 5 states, and you're expanding your footprint, we should definitely start considering for an automation solution. That not only saves you from errors, it also can help you scale the operation in various states. You can also focus on managing your operation with less resources. So that's definitely one of our key recommendations. We also recommend that you define the roles. Within a sales tax compliance operation, there are different elements. As we talked about, data, collection of data, reporting of data, preparation of return, review of the returns, submission of returns, preparation of the payments and submission of payments, record retention. So you need to highlight all the tasks and who can do them most efficient manner. You need to set that expectation. And then you need to define the timeline for all those operations. We, in our operation at Moss Adams, we have a regular huddle. We use a Smartsheet based tool to monitor and track all the deadlines when we get the client's data, when we are preparing the returns, when we're submitting them. So we have a tracking tool. It's pretty critical. If you're in 2 to 3 states, I think it's still critical to have a tax calendar. And if you're in multiple states, it's definitely critical to have a tax calendar as well. So defining the timeline and expectations of the roles, along with regular touch points and tools to monitor the deadlines are key. So we talked about tax calendar, and it can be an Excel-based tool. If it's a simple operation, you can highlight which states you're filing, how often you're filing, what are the forms type. And if you want to get into a little bit of advanced tracking tools, Smartsheet-based tools are pretty good. It's a very much like Phil is just like Excel, but you can develop it and you can use that from multiple jurisdictions and multiple offices and multiple locations, and multiple folks can work on that deadline, on the tool, and so you can maintain that the tracking tool. So you can see, or whoever is managing the process can see where all the returns are, where the payments are, and if we are done with your operations. Exemption and resale certificate, again, automation really solves that problem. So most of the automated tools have ways so you can automate all 3 stages: collection, validation, and retention. In exemption and resale cert, especially folks that are in nonprofit, manufacturing, and retail, you have a lot of wholesale distribution. You really need to improve that process. So those automation tools we talked about, they generally have ways so you can send out blast email to your customers, or you can send 1 or 2 emails to each individual customers, and then they will fill out a form. It gets to your team, you review that, and then it gets stored into your system. And so once you are under audit, you can pull those forms and submit to the auditor, and you can also run report by state. And those tools also have tracking mechanism as to some states have 1-year expiration date, some states have 3 to 5 years. So depending on which state you are operating, you can track the renewal and you can renew those. Florida has an annual renewal, and then some of the states has different renewal mechanism. We talked about reconciliation. The best practice is, once you're, initially the first set of reconciliation needs to happen is with whether you collected your sales data from, let's say, POS system or your web sales, and then you need to reconcile, is it in the GL system? So that's a easy VLOOKUP based and Excel based reconciliation you can do so you can monitor if there's any large discrepancy, what has been collected in the sell side and it's going to the GL. And then the second part of the reconciliation is when you're preparing the returns, you want to make sure that what you collected and is reflected in your sales system is actually reflected in the returns as well by jurisdiction. So if you're creating an Excel-based tool, it will have that, and we'll talk about the automation tools. They all have multiple reporting abilities for you to run ad hoc reports and monitor that. And then the last reconciliation we talked about is once the returns are done at the end of the month, you want to reflect all the payments in the system so it reflects at the end of the day for each month how much you collected and how much you paid. It should be pretty close, given there could be some timing difference. So there are some great tools out there for automation. We closely work with Avalara and Vertex, and we help our clients in selecting these tools. TaxJar is also fairly, TaxJar can be also a fairly good tool. They're connected with, I think Stripe bought them, so if you're using Stripe as your payment processing, TaxJar, you probably have to select TaxJar because it's already embedded in the system. But those tools actually does a great job, for automation purposes. And we'll talk about as you're selecting what are the things you should be considering. And then, the automated tools, the beauty about it is it connects with all your different fragmented systems. So it can automate your web channel, it can automate your GL, which may capture some order entry that are not automated, or it can automate your other retail, like brick and mortar POS systems too. And if you have a separate POS system that are not omni-channel based, that means one sales system that covers all of the channels. And then we'll talk about outsourcing. The automated providers also have outsourcing, and that can be good for certain clients, but also CPA-based outsourcing has a lot of benefit, and obviously we'll highlight some of those benefits in a few minutes. And then you can also co-source, depending on your requirements. So let's talk about automation. What you should be considering to automate your process. Polling question. So you are responsible to configure and maintain tax and return settings in sales tax engine, which is Avalara or Vertex. So true or false? It's actually, we have seen time and again related to this issue. So when you are setting up an automation operation, you have to fully understand that you have to be engaged with the process. You have to own it. You have to configure the systems. All the software providers are great with the software. But at the end of the day, you still have to own your tax footprint. Filing requirements, states where you're filing, what are the product taxability. And we work closely with our clients to setting up those configurations, but just want to highlight that it's a pretty important element for you to consider. So let's see. True, great. Yeah, I'm glad that most of you actually have that insight, and that's correct. So the key benefits of automation, I want to spend a minute and move on. And again, this is a slide we borrowed from the CPAcom. So tax calculation is the key benefit. It automates the process. You can monitor the nexus in all of those software tools as you're getting close to your economic nexus footprint. It doesn't cover your physical nexus or any other nexus, but at least you can monitor your economic footprint. You can also, exemption cert, I think, which is a key benefit. It connects with all your multiple engines, so which is also a pretty important benefit. And also the cost savings of and penalty and interest. And notice resolutions, you can actually focus on making sure that you have less notices to deal with because your process is fairly automated. And the rates, I think that is, I cannot highlight how complex that can be, is the updates of rate. I've seen a lot of clients, they just subscribe to the rate table from this the providers, some of the providers, and that's okay. I mean, as long you are not filing into hundreds of jurisdictions, and if you're selling into hundreds of jurisdictions and you have complex products like SaaS or construction, you definitely need an automation tool. Otherwise, you have a lot of room for error. So one other element of benefit I need to talk about is the robust analytical reporting. So once you have an audit, or at the end of the month when you're doing the reconciliation, I think this automated tools are really great. In a click of a button, you can go to all the transactions. You can dig down into the rates that you're collecting in case you're just not collecting the right rate. You can look at the sourcing. You can also summarize it based on jurisdictions. You can, it's a great tool to have. We can add another slide from CPAcom, but that's just, one of the things just highlighted there is also most of the software companies also do return preparation services. But it's a software company and it's automated. The key element there is if you have a dedicated sales tax team and resources who can manage the process, software automation, return preparation, it can be considered. But if you don't have a dedicated resource, it can be challenging. But what are the key considerations when you're selecting an automation vendor? The first thing is that engine integrates easily with your different GL systems or sales channels. They call it connector or API. Most of this vendor has an automated API, so it's a plug and play, just like you download an iTunes. So they have some of those apps already built in to connect with all your systems. So it's key for you to understand, do they have the connector readily available? If not, obviously you don't want to go with that provider. What is the cost of implementation? So each of this solution vendors have their own way of pricing. Avalara prices based on number of transactions. So if you are a SaaS company, a large hard ticket invoice, let's say you issue only 200 invoices a year, Avalara could be a good solution for you, provided it connects well with your system. And Vertex, another great provider, their fee structure is based on annual revenue. So you need to take that into consideration. Is the reporting available that you need? If you're in the returns that you have are fully covered. If you are into pharmacy or healthcare or some unique environment, construction, does both or all the providers provide those returns? Clearly define the responsibilities. What are they going to do, and what's you're responsible for? So again, that's where our team comes in helping quite a bit of our clients is with the configuration element during the implementation process, because we understand our clients' taxability of the product, and we also understand the product code that are in Avalara or Vertex or any other tool, and we help manage and map that process. So you need to bake that into the implementation protocol. It takes around 4 to 8 weeks. Make sure that you have all the login credentials in place before you file and start get the implementation done. Otherwise, that will just push out your implementation timeline. Again, cannot highlight enough, Nexus, taxability, all those things has to be done timely in the system. So they all have a cut-off time. If you don't add those into the system in a timely manner, they will not prepare the returns in the next cycle. So for Avalara, if you're starting, for the first cycle when you're just implementing, it's by the 20th. And then after that, it's, you can add new states by the 30th. For Vertex, it's the first time around, it's around 12th. And then in the next month, you can add it up to 25th of the month, new jurisdictions. So you just need to understand the different timeline and otherwise you have to file manually the tax returns that falls to the gap. And also, do you have the resources to do this? You really need to have a dedicated resource who understand the nuances and is comfortable with the systems and can manage that. it just required, and they have a lot of good tools in both systems, or in multiple, all the providers have a great tool. You can go to their help center. But if you are in the mix of trying to implement, and it's so difficult to manage all this if you're just starting. So we always recommend that you invest the time, make sure you have resources who can support you with the implementation process. Okay, outsourcing. So what we want to do connect here is what are the benefits of outsourcing? So outsourcing can have multiple flavors. So we're going to cover the outsourcing process that is fully outsourced, but I want to also highlight that you can manage the process and the responsibilities. For example, if you want us to only focus on your use tax calculation and filing, and you want to do the sales tax, you can do that. If you want us to just file the returns and you want to manage the calculation part, you want to create the data and send us the data, I'm talking about the manual process. We can certainly do that. So we can, distribute work depending on how you want to proceed with the outsourcing model. So we want to highlight, we'll highlight what are the key benefits of outsourcing and what is the difference, because we see a lot of questions around if we want to go with a software provider versus if we are just staying with the CPA firm. What are the benefits to go with the CPA firm? So we want to highlight that because, yeah. So Tom, I think you want to cover the next slides.
Yeah, thank you, Mo. So yeah, the key benefits of outsourcing, number one, it's going to help you to avoid any late filing and penalty and interest associated to any late filing. They're going to be, the outsourcing group is going to be contractually obligated to make sure that they're filing accurately and timely. That's probably the number one benefit, to make sure that we're outsourcing that to a group that can relieve us of that responsibility. And then cost too, reducing your cost associated to having to do any type of training or office facilities for employees, and then also documentation, developing documentation, maintaining documentation, and software as well. So it's definitely a great opportunity to help relieve resources and cost. And then using those resources to focus on value-added activities, such as tax planning and sales tax audits. So things that can help you save money in the future, to help make sure that you're calculating your sales tax correctly and filing correctly. You can help reallocate those resources to help with activities like that. And then if you do have turnover, the thing with outsourcing is it makes things a lot more scalable. So if you're currently a company who only has sales tax registrations in a few states, by going across the country and registering across the country, the hours and work associated to doing that are going to increase significantly. So outsourcing can really help if you're in that situation. Instead of having to hire more full-time employees or part-time employees to help with the filing process and the return preparation, outsourcing can really help with that. And then with use tax, just having somebody who really understands the specific nuances and has that technical knowledge to help you, with your use tax accruals and accurately reporting your use tax returns is extremely beneficial. Each state and each return has a lot of different nuances, and especially as you get into different industries, you want to make sure that you have somebody who understands that industry and who can really help you hands-on, generating a use tax process. And notice resolution, you want to make sure you're replying timely to any notice that you may receive from a state. One, to stop any interest from growing, and then two, to get that notice under control and to stop growing with penalty and interest. So you want to make sure that you're replying to those quickly. It can be time consuming to do this in-house. So you want to keep that in consideration too as you're considering an outsourcing option.
Thanks, Tom. So what are the key advantages of going with the CPA firm? So again, software automated solutions are great if you have a dedicated resource. And if you don't have a dedicated resource, CPA firms are a great solution and alternative as well. The key, differentiating factor is you don't have to do anything, and you can, turnkey solution. You can turn over your entire compliance operation. to the extent that you can provide you have the data, access to the data to the CPA firms in a defined time frame, and then you have time to review them. That's the key, right? So you still have to review some of the tax returns and approve them. So most of the CPA firms are the data agnostic, along with us. So we can take any data source from any, and prepare the returns. And so, for example, if you're using Avalara, if you're using Vertex, or if you're using TaxJar, we can feed into any of those sources and file the returns. And then we're the first side of reconciliation, so that's also a key benefit. So you have a touch point where we're going to look at, not only grab the data, prepare the returns, review the data. If we have any questions on the data, let's say you're filing California, your average is like $1,000, but this month it looks like it's 10,000. We're going to raise the question because we have a dedicated team member. Most of the CPA firms has a dedicated team member that works with you on a regular basis. So they become very knowledgeable about your data, the patterns, all the facts. So we're going to review that, and then we provide a full reconciliation. When I say full reconciliation, we provide a summary liability worksheet, and most of the providers do for that month, and also the draft return. So you will have an opportunity. The CPA firm will have an opportunity to be your first line of defense on the review cycle. And then, CPA firms are power users of this, most of the software tool that they're using. So, and they're up to date with the tax forms, the tax laws, any changes that are happening. So you can actually tap into that knowledge base and rely on them to make sure that they're doing it right. Another, super important benefit is you shift. I wouldn't say you shift the notice resolution protocol. Most of the CPA firms and the compliance provider, if they're filing the returns, they're the responsible for resolving any notices. So if they file late, to the extent that you provide them data on time and it's not your fault, they will make sure that the tax is mitigated, including the penalty and interest. Because that's their responsibility to have it during their watch. So I think that's also a pretty important benefit. You can have one trusted advisor for all tax matters. So for example, let's say you have sales and use tax nexus, but you want to understand, does that also elevate your, does that, also make you required to file for income franchise tax? So we have professionals that covers not only state income tax, sales tax, but all other taxes. So you can have that guidance there. So and also we have the ability to support our clients not only with the sales tax nexus analysis, taxability analysis, registration. Then if you have prior period filing requirements, we can catch up to the filings. If you have risk, that means you haven't registered and you just went through a due diligence process, and all of a sudden you have $500,000 or $1 million prior liability, and we help mitigate those through voluntary disclosure process, and then we can transition our client to an ongoing filing protocol. So not only and then as you start filing, and then if you get audited, we can help you with that. We can also help you with configuration of the software tool. So as you can see, we are an end-to-end solution, and so is most of the CPA firms, and so there's definitely a tangible benefit. Now, most of the time, we have clients that are asking questions like, okay, if we switch to a full service outsourcing model, do we still need to have a resource? Yes, you will need, whereas if you had someone was doing the return, or maybe one or two folks doing the returns, in that case, you probably monthly need at least 6 to 10 hours. So that 6 to 10 hours is for you to do the reconciliation, still to do the reconciliation to your GL, and still approving the returns, taking the returns and draft, file returns and saving them in your system. And if you have any questions on taxability, they still have to interact with your customers on sales tax questions or other departments. So there's definitely, but it will be a lot less requirement. And so I think that's another key benefit. Okay, so we talked about the benefits, and we wanted to highlight what are some of the key process flow for the data. How does the data flows through us if we, when we do the tax returns? So we request that you have the GL data and your web sales data or POS data. So we grab that data, and we have a template that requires only 8 or 9 data fields. We need the invoice date, invoice number, your gross sales, ship to location, ship from location, and the zip code and state, along with your tax collected and exempt sales. So once we get that data point in our standard template, we prepare the returns and then using our software tool. Now let's talk about how we do our workflow. So this is our compliance outsourcing model workflow. So we request the data from our client by a certain date. And then once we have the data, we prepare the returns. We create a liability worksheet, and we provide the liability worksheet summarizing by state and liability amount. And then we also provide the draft returns within a couple of weeks. And then you have an opportunity to actually within first week, sorry. Once we get the data within a week, we'll provide you all the the drafts, and then you have a chance to review them. And then once you provide approval, we just file the returns. And then once we submit the returns, we provide copies of all the returns for your reference. I think that's our workflow model. So I'll stop there. I think we have, and I think that's pretty much, the workflow. So I'll stop there. I know we covered quite a bit, and I want to pick a few questions from the audiences. I know we have a few questions. So Emily, can you please provide us some of the questions that we have seen so we can answer them?
Absolutely. So just a quick note, we have a lot of attendee questions, and unfortunately, we are not going to be able to answer all questions in the next 3 minutes. So we'll see what we can get to before we are out of time here. All right. Let's see. We have Nexus in a couple of states, but we are growing rapidly. When should we consider implementing sales tax engine?
Yeah, I think 1 or 2 states. It depends on if you which states you're filing in. If you're in California or Texas that are complex hybrid tax rule state, I would say when you have 4 to 5 states, you should start thinking about automating the process because at that point, it takes anywhere 3 to 5 months, and maybe you'd be already by then filing 100 returns, and so automation should be a good solution at that point.
All right, thank you. And we probably can squeeze in another 1 or 2 here. If we outsource our compliance, what level of resource commitment will we need to support the compliance process?
Yeah, I mean, it's just minimum resource commitment, making sure that you have the right resources to do the reviews and provide the data and do the reconciliation. So anyway, from 8 to 10 hours every month would be good. Great.
And one more. Let's see here. Can you go into more detail about the different types of sales tax returns? You mentioned states may require a sales tax return, but may also require seller use tax returns as well as consumer use tax.
Yeah, Tom, do you want to take that?
Yeah, I can take that question. So it's a great question. Some sales tax or some states will require you to report a sales tax return. Other states, depending on the transaction that you're having, whether it's coming from outside the state into the state, you may have to report a seller's use tax return, which could also be called a retailer's use tax return or a vendor's use tax return. They're all the same type of return that could calculate at the same rate as the sales tax rate, or it could calculate at a lower sales tax rate. You also have your direct marketers returns and your consumer use tax returns. Just something to consider with that is if you are reporting, some states may require you to report multiple returns. So Oklahoma, for instance, you may have to report a sales tax return for your transactions that take place in the state. And you may also have to report a retailer's use tax returns for transactions that originate outside of the state.
All right, thank you for that, Tom. So we are just about at the top of the hour here. Thank you so much, Tom and Mo, for a great presentation today. We certainly covered a lot of material. And like I said, we have so many great attendee questions, and we'll be doing our best to follow up with you after the presentation. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 3 weeks should you have any difficulty downloading it now. Here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as we value your feedback. Thank you for joining us, and we hope you'll join us again next time.